Welcome to Stock Talk with Nico Criticos. Today we're going to be going over Alibaba stock, one of the giants in China. And so first thing we're going to look at is the stock price. So as you can see, in 2020, it hit $309 a share, and today it's $130 a share. It has not been this cheap since 2017. So I started buying this one a little bit too early. I bought 35 shares at an average cost of $209, and I would like to average down even more, but I have so much money in this that it's hard for me to invest more because I can't let it get too big of a part of my portfolio. So we're going to use my stock market checklist to see if this stock is a buy or not. And as you can see here, out of all 16 criteria, it hit every single one, which I don't know if there's any other stock I've ever seen do that. So first one, is the stock down or oversold? Yes. In the past year, it's down 43%. Next up, we have revenue and net income increases. And as you can see, let's see, right here, you can see for years they have been growing revenue and net income. I think the trailing 12 months is supposed to be slightly down a little bit, but nothing too substantial. So that's still going to count as a yes. Then we have a healthy price to sales and healthy forward price to earnings. And we can see here that it's at extremely low levels, a forward PE of 12.5. Okay. And this company, they're still expected to grow profits next year and have 17% revenue growth. So that's even better. So a 12.5 forward PE and a 2.7 price to sales. If we look up Alibaba forward PE history, we can see here that this company normally trades at a forward price to earnings of like anywhere from 40, 30, and then right now we're trading at a 17. So by any metric, this company is greatly undervalued. And if you don't know what Alibaba does, this is what their website looks like. They're pretty much like the Amazon of China. That's the best way to think of it. And they're involved in so many different things, but their main business is retail e-commerce. But next up we have, is the company innovative or do they have a moat? I put yes. The moat being here is that I think the amount of things they're involved in and how important they are in the Chinese economy, I'm counting that as the moat because they have over 1 billion people using or almost 1 billion people using their services. I think over 1 billion using their services. And so that's not an easy thing to replicate. It's not like any company can come in there and take their position. So I'm going to count that as a moat. Growing industry, yes. E-commerce is definitely growing. They're also involved in their cloud business is also growing. So that's going to get a yes. Next up, we have return on invested capital. I believe the return on invested capital for this year is what, 20? Yeah. Return on capital, 20%. That is very high. That is fantastic. Next up, healthy margins. Profit margin of what, 15? Yeah, 15% for this company. And that's very high for their type of business. If you look at Amazon, it's the business model is pretty much the same thing, but look at how much lower their profit margins are. Profit margin 5% for Amazon. So another metric to show how undervalued they are. Next up, we have healthy cash flows, and we can see right here that once again, how I said cash flow it's been growing for years. Okay, we've seen, keep in mind, this is not in United States dollar. This is in the Chinese yuan. So keep that in mind. But see, so you can see that they've been growing cash flows. And then 2021 was a very good year for them. But, or no, more like 2020 was a good year for them. And then the last 12 months has come down just a little bit, but numbers are still strong. So diverse revenue streams, yes. If we look up all the way Alibaba makes money, you can see that how I said the main one is I wrote down here, where is it? I put 66% of revenue comes from e-commerce, okay, and 8% comes from cloud computing. Then they also are involved in other businesses, but those are the two main ways they make money. See, there's also things here like you could say 5% comes from international commerce, retail, logistics services, consumer services, digital media, entertainment. So they have a bunch of different ways of making money. So that's definitely going to get a yes. Then we come to their balance sheet. And if you look at their balance sheet, they have everything is intact here. Equity has been growing for years. Equity is actually doubled in the last 3 or 4 years now. And then total current assets higher than current liabilities, long-term assets bigger than long-term liabilities. And then we have a share buyback or dividend, although if you look back, the number of shares for this company is up a couple percent. You can't see it here, but if you look up Alibaba number of shares history, you can see that it's going up a little bit. Let's see. It's gone from 2.5. See, it increases 1 or 2%, which isn't the end of the world, and they don't pay a dividend. So technically you can count that one as a no, but they just up there. They increased their share buyback program for this year with a $15 billion. It was 10, now it's $15 billion share buyback going back into the company. So I'm going to count that as a giving back to the investor. And then finally, we have is big money interested? Yes. We know a lot of hedge funds have been selling out this past year, and that's what's pushed the stock down so much. But now it seems like people are starting to get more interested. What is it? JP Morgan just said that it doesn't make any sense. They lowered their price target to $180, but they still said that it's undervalued. So I guess it makes sense, but I don't know why I think the price is going to be a lot. It's going to go back over $200 a share. And so if we look at someone like Charlie Munger, we can see he doubled up his position in 2021. And so that's also another good sign. So yeah, Alibaba hit all of these 16 out of 16. And I put their moat is that they have 1.1 billion users. If we look up, I think it depends on what service of theirs you're looking at, but if you look up number of users, yeah, approximately 1.2 billion. So, okay, so 953 million in China and then 285 million overseas. So yeah, this is a hard one. This one looks like easy money. Look at the 5-year chart. From 2017, 2018, this company was $180, $190 a share. And today we're sitting at 130. So did I buy this one a little bit too early down here at 210? I mean, looking back at the time, it seemed like that was a great deal, but no one could have seen this coming with this, 50% drop from its highs. So, I mean, it is what it is. I think I'm very confident it's going to come back, and I think this will be a $250 company again one day. So, yes, that's all for today. Thank you for watching, and I will see you in the next video.